Good morning. It's Wednesday, September 10th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So let's check in on your setup in the U.S. equity markets and also the precious metals. So silver hit that support level outlined in the chart pack, 41.15 overnight, before bouncing the overnight futures here up just under about 1%, sitting at about 41.66.5. Now, why haven't we been able to break through $40 on a closing basis? We've probed up above there several times here, and the way the market looks to set up here today, your first area of resistance is going to be 41.90. Second will be 42.45. But the key is that we got to close over 42. That way we can build on some momentum. Now we saw ANZ, they had come out and they had upgraded their year-end target on the silver market up to $44.70. But the reason, back to what I was saying, why we haven't been able to sustain the rally is that we've seen 4 straight days of ETF selling. This has been the longest losing streak since August 5th. ETF flows are a vital component for a sustained rally in any market out there because of the broadening strength and nature. Think of it this way. Think of it as you're a large army and you're going to battle. You've got strength in numbers, and that's where the ETF flows really are important. Now you look at the US equity markets, what happened to the seasonality? Because for all you bears out there, the stock market did something on Tuesday that it hasn't happened to do since December. The Dow Jones Industrial Average rose 200 points or 0.4%, marking its third high close of 2025. The S&P 500 rose 0.3%. The Nasdaq rose 0.4%, both marking their 22nd record close on the year. So you had all three indices pushing on to record closes. Now, at the same time, the Bureau of Labor and Statistics on Tuesday marked down its previously reported net payroll gains by 911,000 jobs over the last 12 months through March. This means that instead of adding 1.8 million jobs as originally reported, the U.S. economy only created about 847,000. So there's 2 takeaways from that. Realistically, if you had been working with us for any substantial period of time, a lot of the models that I work with were indicating this weaker jobs number, and it was an absolute head scratcher, these blowaway numbers. So they were clearly fictitious here, and a lot of the rally was orchestrated by a previous administration. Now, I'm not getting into politics here, but there was definitely some discrepancy in the numbers and what we were seeing in the breakdown. And the reality is that several months into it, we would see these large revisions come down and no reaction in the U.S. equity markets. Now, U.S. equities are operating at a beat to their own drum here. We're seeing different drivers of the moment right now with CapEx spending, AI, longevity, just adapting to new elements and new drivers and broadening the strength of a lot of individual companies. Now, the next big step here for the market, or next big test, is going to be that BLS producer price index for August, which will come out here today. And then you're going to have the CPI index coming out tomorrow. Now, the S&P 500 up about 0.2% at 65.36. And you got the Nasdaq here just pushing a little bit higher here, up about 0.2%. The FANGs in the overnight, those are pushing higher as well. You look at the CME's Fed Watch tool, because that's something else that we want to look at, especially when you're trading in the precious metals markets. You want to have a checklist of things you go through. One of the first things I look at here, where's the dollar index? Where's 10-year Treasury yields at? How is the broad economy looking at? What was the overnight price action? What's the CME's Fed Watch tool indicating? What are the ETF flows? These are a lot of different things that kind of give you a sense as far as where the market is going, the strength of the market here. Should you be looking at buying the dip, or should you be looking at perhaps lightening up here? Is there caution in the market? So the CME's Fed Watch tool, that's at September 16th, 17th meeting, and we are in a Fed external communications blackout period here until that meeting. You've got an 89.8% chance of a 25 basis point interest rate cut and a 10.2% chance that they leave rates unchanged. Now, the inflation data should start to push higher here, and what that'll end up doing is it'll actually erase the 50 basis point interest rate cut, and it seems that a 25 basis point interest cut rate cut is really cemented in place here. And there would be very little in order to prevent the Fed from conducting that interest rate cut. Now you look at the overnight price action, you've got 10-year Treasury yields just edging just up a little bit. A lot of the traders working with me closely had shorted some Treasury futures, had bought some put spreads on the 10-year Treasury note because of the fact that if you look at the chart pack and you look at the 10-year Treasury yield chart, you could see that it's kind of reached this triple bottom here of these higher lows on there. And we do anticipate we'll see some kind of bounce back in the Treasury yields. As markets, what do? They bounce from oversold territory or they correct from overbought territory. That's where it's very important to have multiple layers of different things that you're utilizing to come up with some of your investing and trading decisions in the market. That's why the chart pack is something that is just very objective, looking at very simple long-term levels of support and resistance in areas where markets may be a bit stretched, in areas where people would look to consider reducing on some of their positions. Now you look at the volatility index, that's something else you should look at every day, especially if you're a US equity bear, because there's nothing that gives me any kind of sign at the moment that we should look to see any kind of material breakdown in US equities because of the fact we've been trading within this basket here of about the 15 to 20 on the volatility index. Once you get over the 20 level, you'll start to see some of those volatility moves, those 1%, 2% moves in the US equity markets where traders start to get chopped up in their daily trading. And then also you're gonna wanna see them get more defensive in nature. They'll go back to cash. They'll get frustrated. Their emotions will get high. That's over the 20 level. And currently as of the futures, we're trading at about 1633. The dollar index just about unchanged here on the day. Euro currency just slightly weaker. WTI crude oil, that's a standout here at the moment, trading within a $60 to $65 range. You've had heightened Middle East tensions here with some of those strikes that took place yesterday. So you're seeing 3 straight days of growth in the oil market here, but I anticipate that the oil market is most likely bouncing to just one big, larger, lower high on the charts here as we start to approach that $65 area. Remember, we had one of the craziest geopolitical situations back a few months ago, and oil prices were unable to sustain a rally up over the $80 mark. Now you look at European trading because you also want to look across the pond because a lot of times things will front run one thing or another. European trading, those equities gained after signs of that weaker U.S. labor market really fueling those expectations for that Fed interest rate cut. Then you go to Asian trading, well, those stocks rose with the technology-denominated markets in South Korea, in Taiwan, just leading the charge, pushing on up to record closes up over there. The MSCI index, that jumped 1.1% to the highest level since February 2021. Getting back to the gold market, after some weakness, coming back down to support that 3651, 3652 area here, and that's going to be about your key level of support here on the day, bouncing back up 3694 last. Yesterday's price action when we broke through $3,700 was mostly fueled by stop losses, buy stops that were there where traders were trying to pick a top on that market, trying to sell with stops over these psychological levels. You tend to get this type of price action when futures get just a bit frothy, and how I measure the froth is really the angle and the trajectory that we've gone since those August lows. We've rallied about 10%, not only on the gold market, but also in the small caps and the Russell, where the market is starting to really broaden out on the rally and has been one of the shining stars of the U.S. equity markets. Now, as you get CPI and inflation and we take away some of that 50 basis point interest rate cut, you'll start to see the Russell 2000, it pulls back just a bit. However, I believe that the corrections in the Russell will be shallow in nature. Back to the gold market here. Really, if you look on the chart pack again, your critical level of support and your line in the sand is really right around that $35.85 area, $3,600. But we don't see any indication that futures should travel down to that level here at the moment without some kind of major catalyst, like a surprise, very big surprise uplift on this inflation data, getting back over 3% year over year. Things like that is where you could really start to see things kind of deteriorate quickly in that market. You go to the silver market, again, that 40.15 is going to be your critical level of support. A break below that level, because we do have a bull flag forming on the chart, would most likely warrant a test somewhere near that $40 in nature. If you got a move below $40, I would anticipate that the dip buyers come in for one last shot here at buying that market before, if we push lower, capitulating, and you could see a bigger washout down into the 37, 38 mark. I'm not a bear on the market. I just like to be aware. What are the things that could possibly happen if certain things, certain elements come out there? What if you get a flat tire on the way to work? What if you're running out of gas? You got to stop and fill it up. Things like that. You just want to be prepared. Throw a jacket in the car. Could be cold out there. Throw a rain jacket, whatever. I'm just saying that we want to look at these levels here. So that 41.15, critical level of support kind of on the silver market. Break below that $40, break below that. Red flags here. We're bouncing to lower highs on the chart, and we're seeing a washout. Now you look at platinum. There was a story that I just sent over to my partner, Bill Baruch, here a few minutes back, saying that platinum's on course for the third annual deficit here, and they're just marking down some of the numbers here. And we've seen a lot of these metals just struggle to really get supply brought back online. So when you get to platinum, you're seeing futures bounce off that critical level of support that we flagged right around that $1,375, $1,400 area, and pushing on up here, up about $30 in the overnight session. That's a 2% rally. You get the copper market. Copper's really been left for dead here recently. It is slowly moving up. We've seen 3 lower highs on the charts here, but really we need to see this breakout over about that 466 level in order to really attract some of the momentum traders, because a lot of the traders that I work with, they don't care what the commodity is. Their primary goal is to make money, and they know that when a market breaks out to the upside or breaks down significantly and takes out lows, the chances are money is going to follow that. Stop losses are going to get hit, and those are called momentum traders. They're trying to catch the next trend in the market. Markets only trend about 20% of the time, and 80% of the time they're in a consolidation phase. So if you guys got any questions, you like to get some things, we did write a small short document on the silver market, a special report on that we're going to start posting and sending out. We also are broadening out some of the research that we're doing here into the cryptocurrencies and other markets here, such as the FX markets as well. So if you guys got any questions, you want to check any of these things out, send an email to info@bluelinefutures.com. And remember, the futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.